Railway stocks are back in focus and on track, as most of the stocks have recovered post strong declines. My colleague Anushi joins in with a detailed report on this. Anushi, good morning.
Hey, morning, Puneet. So, what we are seeing in this 1 week period is some sort of recovery coming back for these railway counters that are out there with strong gains from counters like Ircon International, Texmaco Rail, and RVNL as well. Do note, if you just take the 6-month period in perspective, we had seen sharp declines here with Texmaco Rail, Titagarh, and Jupiter Wagons in particular seeing declines of over 20% as well. Now, but while the outlook is improving, what we had seen by this sort of recovery, recent order win supporting this kind of an outlook going forward for FY26. This is especially after a period of a weak performance in FY25 that we'll just address a bit later. But this railway stocks have recovered post strong decline seen in the last 6 months. So this is also with investors being more constructive on the rollout of Vande Bharat and the metro trains, as RVNL and Titagarh Wagons are also pointed out in their management commentaries. But the question also remains that is it too early to cheer for these railway stocks that are there? Because if you look at the order books now, while the orders are coming in for the business for FY26, order book execution has remained a concern. Along with that, increasing competition is something that a lot of these managements have pointed out. This includes the likes of Ircon and RVNL, which have said that the traditional railway business has seen a lot of competition recently, because of which margins have remained under pressure. So that is something that we need to keep an eye out for, because majority of these railway companies are diversifying beyond the traditional railway businesses which are there, which is kind of driving the growth forward for FY26, 27 as well. Now, if you talk about the overall order book on how that has been, we are seeing some strong gains for the likes of RVNL. Now, it sees the current order book is 98,000 crore. Management does expect this number to reach to the likes of 1.5 lakh crore by this next 1 to 2 years as well. Even in rights, we had seen an order book increase subsequently over the years, while for Ircon and Texmaco, it has majorly remained in that range in the last 2 years. But if you take the order book in context with what has happened with the execution part, that brings us to our next slide, which is the revenue growth of majority of these companies. Now, if you take the likes of Ircon or even RVNL rights, they all have reported revenue declines, while Texmaco is an outlier in this space, seeing strong numbers in FY25. But a lot of issues were there in FY25. This included unavailability of wheel sets, which have affected wagon manufacturers like Titagarh Rail and Jupiter Wagons. While FY26 outlook, if we see, large tenders are expected in H2 of FY26. This is post absence of strong orders in FY25. So management remains optimistic on regaining revenue growth. This is after a lull FY25 that we've seen. So we should keep an eye out for these railway stocks for further recovery to be seen.